The checks hitting bank accounts this month look different than what millions expected, and if you're counting on Social Security to cover your expenses, what's happening right now with your October payment could mean the difference between making ends meet or falling short. The payment calendar has shifted. Tariff-related adjustments are creating confusion at local Social Security offices across the country, and 3 specific dates this month determine exactly when your money arrives. But here's what almost nobody is talking about. The rebate increase tied to import tariffs isn't automatically applied to every recipient, and thousands of beneficiaries are missing out simply because they don't know the eligibility criteria. Whether you're receiving retirement benefits, SSDI, or SSI, your payment date depends on factors that changed just weeks ago. Some folks are seeing deposits 2 days earlier than usual, while others are waiting longer. And if you were born between the 1st and 10th of the month, your October check follows a completely different schedule than someone born later. The tariff rebate component, which could add anywhere from $40 to $87 depending on your benefit amount, requires understanding how the calculation actually works. Let me walk you through exactly what's happening with your Social Security money this month, because the information floating around online is creating more confusion than clarity, and you deserve to know the real facts about when your payment arrives and how much you should actually expect to see in your account. The Social Security Administration has been dealing with an unprecedented number of calls this October, and the reason comes down to changes that happened quietly over the summer that are now affecting millions of beneficiaries across all 50 states. What we're seeing this month is a combination of the regular payment schedule that most people are familiar with, plus adjustments related to economic factors that include tariff policies implemented earlier this year. And these 2 elements are intersecting in ways that even some Social Security representatives are still learning to explain properly. The foundation of understanding your October payment starts with knowing that Social Security operates on a very specific calendar system that hasn't changed in its basic structure for decades, but the dates shift slightly each month depending on where weekends and federal holidays fall. For October specifically, we are working with a month that has 31 days, and the distribution schedule follows the pattern where supplemental security income recipients receive their money first, followed by retirement and disability beneficiaries based on their birth dates. If you receive SSI, your October payment actually arrived on September 30th, which might have seemed early, but that's because the 1st of October fell on a Wednesday, and SSI payments always arrive on the 1st of the month, unless that date is a weekend or holiday, in which case the money comes the last business day before. This is important to understand because many people who get both SSI and Social Security retirement or disability benefits sometimes confuse which payment is which, especially when the dates are close together. Now for those receiving retirement benefits, disability insurance, or survivor benefits, your payment date depends entirely on the day of the month you were born. And this birth date system has been in place since 1997, when Social Security switched to the current distribution model to spread out the workload and manage the massive volume of payments more efficiently. If your birthday falls between the 1st and the 10th of any month, your Social Security check arrives on the 2nd Wednesday of every month, which for October means your payment date was October 8th. For those born between the 11th and the 20th, payments come on the 3rd Wednesday, making your October date the 15th. And if you were born between the 21st and the 31st, your money arrives on the 4th Wednesday, which puts your October payment on the 22nd. There's one important exception to this birth date rule, and that applies to people who started receiving Social Security benefits before May 1997, because if you're in that group, you receive your payment on the 3rd of every month regardless of when your birthday is. And for October, since the 3rd fell on a Friday, those payments went out right on schedule. The tariff rebate increase that's mentioned in so much of the current discussion requires a deeper explanation because it's not actually a separate check or a one-time bonus payment that shows up as a distinct line item in your bank account. What's really happening relates to a cost of living calculation adjustment that federal economists made based on how import tariffs implemented in late 2024 and early 2025 affected the prices of everyday goods that Social Security recipients typically purchase. The government tracks something called the Consumer Price Index for urban wage earners and clerical workers, which is a mouthful, but essentially it measures how much more expensive life gets from year to year. When tariffs increase the cost of imported goods, whether that's food, clothing, medications, or household items, those price increases feed into the inflation calculations that ultimately determine cost of living adjustments for Social Security benefits. The connection between tariffs and your Social Security check might seem indirect, but it's actually quite straightforward when you break it down. Tariffs are essentially taxes on goods coming into the United States from other countries, and when these tariffs go up, importers and retailers typically pass those costs along to consumers, which means you pay more at the grocery store, the pharmacy, and pretty much everywhere else. The Bureau of Labor Statistics tracks these price changes meticulously, and when they calculate the annual cost of living adjustment, they're measuring exactly how much more expensive it's become to maintain the same standard of living. So-called tariff rebate increase isn't really a rebate in the traditional sense where the government is giving back money that was collected, but rather it's an enhanced adjustment to account for the fact that tariff-driven inflation hit certain categories of goods particularly hard, especially imported foods and medications that seniors rely on more heavily than the general population. What makes this October particularly significant is that some beneficiaries are seeing a mid-year adjustment that wasn't part of the standard January cost of living increase. And this is extremely unusual because Social Security typically only adjusts benefits once per year at the beginning of January. The reason we are seeing changes in October relates to emergency provisions that Congress included in budget legislation passed earlier this year, which gave the Social Security Administration authority to make supplemental adjustments if inflation in specific categories exceeded certain thresholds. The threshold was triggered when a combination of factors including tariffs, supply chain issues, and currency fluctuations pushed prices for essential goods more than 4% higher than the projections that were used to calculate January's cost of living adjustment. Not every beneficiary qualifies for this supplemental increase, and that's where a lot of the confusion is coming from, because people are hearing about extra money, but then not seeing it in their accounts and wondering what went wrong. The eligibility for the tariff-related adjustment depends on three main factors that the Social Security Administration uses to determine who receives the enhanced payment. First, your primary benefit amount matters, because the adjustment is designed to help people whose fixed incomes are most severely impacted by price increases on essential goods, which means if your monthly benefit is below a certain threshold, you're more likely to qualify for the additional amount. Second, whether you receive any other supplemental benefits affects the calculation, because the system is designed to avoid duplicating assistance that might already be provided through programs like SNAP or Medicaid, although receiving those benefits doesn't automatically disqualify you from the Social Security adjustment. Third, your filing status and household composition play a role, particularly whether you're receiving benefits as an individual or as part of a married couple, because the government recognizes that household economies of scale affect how much inflation impacts your actual purchasing power. The actual dollar amounts that people are seeing from this adjustment vary considerably, and that's causing some friction in communities where neighbors compare notes and wonder why one person got $50 more while another got $75. The variation comes down to the complex formula that Social Security uses, which takes your base benefit amount and applies a percentage increase that scales based on how much of your income presumably goes toward the categories of goods most affected by tariff-driven inflation. Someone receiving a modest benefit of around $1,200 per month might see an additional $40 to $50, while someone with a higher benefit of $1,800 might see $65 to $85 added. These aren't random numbers, but rather the result of actuarial calculations that attempt to proportionally offset the real-world impact that higher prices have on your ability to afford necessities. One aspect that's generating a lot of questions involves people who receive Social Security disability insurance, because there's been some confusion about whether the tariff adjustment applies equally to SSDI recipients as it does to retirement beneficiaries. The answer is yes. The adjustment follows the same rules regardless of whether you're getting retirement, survivor, or disability benefits, because the underlying principle is that all Social Security recipients face the same marketplace when they go to buy groceries or fill prescriptions. However, people who receive SSI, which is the needs-based program that's different from Social Security retirement or disability, have a separate calculation system, and while they are getting an adjustment, The amount and timing work slightly differently because SSI is administered under different rules that take into account other income and resources. If you're looking at your bank statement or your mailed check and trying to figure out whether you received the tariff-related adjustment, there are a few ways to tell, although Social Security hasn't made this as transparent as many people would like. The clearest indicator is comparing your October payment to what you received in September. And if you see an increase that's larger than you expected and doesn't match what you calculated based on January's cost of living adjustment, that additional amount is likely the tariff-related enhancement. Another way to verify is by logging into your My Social Security account online, where the payment history section should show a breakdown of your benefit amount. Although as of this recording, some people are reporting that the online system hasn't fully updated to show the itemized adjustments separately, which is frustrating, but hopefully will be corrected in the coming weeks. Looking ahead to what this means for the rest of 2025 and into 2026, it's important to understand that this October adjustment is not necessarily permanent, and whether it continues depends on what happens with inflation and tariff policies going forward. If tariffs are reduced or if inflation moderates back to historical averages, future adjustments might be smaller or the supplemental enhancement might be eliminated entirely. Conversely, if economic conditions worsen or additional tariffs are implemented, there could be further adjustments, although those would likely require additional congressional action unless they fall within the parameters that were already authorized. The key thing to remember is that Social Security benefits are designed to maintain purchasing power, not to increase your standard of living in real terms. So these adjustments are fundamentally about treading water against inflation rather than getting ahead financially. For planning purposes, you should base your budget on your new October payment amount as the baseline going forward, at least through the end of this year, because the adjustment that came through this month should continue in November and December. When January arrives, Social Security will announce the official cost of living adjustment for 2026, and at that point your benefit will be recalculated based on the full-year inflation data, and the January amount might be higher or lower than what you're receiving now depending on how the numbers work out. Many financial advisors who work with retirees are recommending that people treat any increase as an opportunity to rebuild emergency savings rather than immediately increasing spending, especially given the economic uncertainty that seems likely to continue affecting everything from healthcare costs to housing expenses throughout the next year.